Hello and welcome to the first LISW Shipping Risk Forum. It's great to have people in person here, but we also have over 400 people online as well from around the world. So for all those people out there, and I hope you can see and hear me, it feels a bit odd speaking to a sort of virtual audience, but welcome to you as well. I think we've got a great day today. We've got some leading practitioners across the market speaking about some of the most pertinent issues within the insurance market. Thank you so much to the IDRC for hosting us and doing all of the technical bits and pieces to make this event possible. And to start off with, I'd like to invite Damien Hickman, Chief Executive of the IDRC, who's going to tell us a bit about this building, but also talk about some of the housekeeping for today's session. So Damien, thank you.
Thank you, Josh. Welcome everybody, and it's great to see faces, and it's great to see people in person. And just on seeing people's faces, and just so you can feel secure on where you are, the building we've basically stripped out, and it's got a brand new air conditioning system, and it's an innovative aircon system that eliminates 99.9% of viruses, bacteria, allergens, so it's a clean air. So it's as clean in here as it is outside. So if you don't want to wear a mask, you don't have to wear a mask, and that's in the whole of our building. So it was really important for us to do that, to encourage people to come back to these in-person hearings. So that's, you know, just a bit of a safety thing. Just a bit of housekeeping. There's sort of tea and coffee behind you. The coffee's on the other side with the iPad, and toilets. If you go past reception, turn left, turn right. The toilets are out there. We're not expecting any fire alarm tests. So if fire alarm does go, you've got a fire exit there and a fire exit behind. So it's enough of all that sort of stuff. So IDRC, yeah. So this is our second day open here at the new centre, and you can probably tell because we've still got the hoarding up. So apologies if you had trouble finding the right entrance. When all the hoarding goes, we've got our own entrance that will be there, but we can use some pools as well. So we've got 2/3 of this building. We've obviously got the ground floor space here, which is our sort of event space, dining area, breakfasts and all that sort of stuff. And then on our upper floors, we've got hearing rooms. So we've got 18 hearing rooms, and our biggest hearing room can take 200 people. So we can host public inquiries as we have done over the years. And again, it's all brand new. And as regards to sort of tech, we've spent over £1 million on technology, because what we're seeing going forward as regards to the hearings are these hybrid hearings. So we've got cases going on at the moment that are hybrid hearings. So we've got a lot of people here at the centre and also joining virtually as well. That's it for me, really. So I'll just welcome again and enjoy your day.
Damien, thanks so much, and thanks again for your team, who I know have worked very hard whilst preparing the building for its day job, I suppose, in terms of hosting us today. It now gives me great pleasure to host my boss, Chairman of Maritime London, Lord MOUNTEVANS, who's going to make some introductory remarks. Jeff.
Thank you very much, Joss. Good morning, ladies and gentlemen. As Chair of Maritime London, it gives me the greatest pleasure to welcome you to the first LISW Shipping Risk Forum. Maritime London has truly brought together the London marine insurance market for this event, as we hosted in partnership with the International Group of P&I Clubs, the International Underwriting Association, the London and International Insurance Brokers Association, and the Lloyd's Market Association. I would like to start by thanking the partners in this event and the organising committee, which is made up of leading figures from across the market, all of whom have put in a huge amount of time and energy getting us here today, in what can, without question, be described as uncertain circumstances. I would like also to thank our world-class lineup of panelists from across the marine insurance disciplines: marine insurtech, ship owning, maritime law, ship finance, recruitment, and government. Lastly, I would like to thank Maritime London's own Olga Jakes who has not only been responsible for producing the conference today, but is also working on several other events this week. And I should also mention Joss, our chief executive, who's been very active in this project today, but also is chairing the conference day of LISW tomorrow, which is a huge kind of 5-ring circus. So he's been absolutely flat out. I'm sure you can't wait till the weekend, Joss. I remember also having several conversations with the team when we were looking for venues for this event at the beginning of the year. Many of the usual haunts for high-profile Maritime London events were simply unable to commit to hosting an in-person event in September. I would like, therefore, to thank the IDRC for providing us with this wonderful setting in their brand new, as we see and hear, offices in the shadow of St. Paul's. I think I'm right in saying this is the first event they have held here. We feel truly honored. The IDRC has also taken on the tech burden of this event, as you heard, and I'm sure it will be a great conference, not only for those of us who are lucky enough to be here in person, but also for those attending virtually from across the world. And I'm sure for some of you, particularly the lawyers in this room, this could be the first of many visits to this important new venue. Of course, this is a transitional LISW, as we are still unable to welcome many of our international colleagues. While some may think this is a negative, one of the many lessons we have learned from the pandemic is the power of virtual platforms and their ability to reach wide audiences. This event is no different. We have over 400 participants, as Joss mentioned, virtually, and all of you here, and I know more will be coming during the day, from over 30 countries of virtual participants around the world. Isn't that both remarkable and fabulous, I think? As a member of the House of Lords, I've heard a lot in recent times about global Britain, and I'm sure you have too in many, many fora. There may be some ambiguity to some about what this phrase actually means. It can conjure up images of heavy manufacturing and the UK exporting physical goods around the world. I'm sure there is significant scope to rebuild the UK's manufacturing industries, and the endeavour is greatly to be applauded. However, as a former Lord Mayor of London and of course Chair of Maritime London, I do get a little frustrated that there is not a greater comprehension of the central role the UK has with regard to the facilitation of global trade. Nowhere is this more evident than in our world-leading marine insurance market that quite simply enables the global trade in physical goods. Furthermore, as the shipping industry grapples with a raft of regulatory issues at international, regional, and commercial levels, an onerous sanctions landscape, and the prospect of an increasingly complex energy mix as the industry strives to reduce greenhouse gas emissions, the complexity of the risk is set to increase. Against this background, as long as we do not take our eye off the ball, London's undisputed capacity and expertise should mean London is a market well placed to continue its role as a crucial cog in the international trade machine. While we have a great story to tell, there is always scope to aim higher. I'm sure this forum will not simply be an advert for the London market. Rather, I hope we will have an honest, open, and robust dialogue about the challenges and opportunities in marine insurance and how the insurance industry is adapting to some of the macro issues, that shipping currently faces. I'm now going to hand over to my good friend ANDREAS BISBAS of Tsakos Shipping, who I will have no doubt will provide his own robust appraisal of the marine insurance market, which I'm sure will lay the foundations for a day of fascinating discussions. Thank you. Have a great day. I'm going to leave shortly, but I'll be back very soon. ANDREAS, over to you.
I'm using a different mic, so I hope you can hear me. So good morning, ladies and gentlemen. It is a great honour for me to have been asked to speak at today's Shipping Risk Forum. And I would like to thank Lord MOUNTEVANS and the organisers of today's event for giving the subject of insurance such a prominent platform during this week. Years ago, if asked why a ship owner bought insurance, the answer was always to pay the claim in the event of a casualty. Whilst that answer remains true, we also buy insurance because it represents our ticket to trade, without which there would be no physical damage or liability cover, no certification, no finance, and crucially, no charters. Insurance is therefore an integral part of shipping and maritime trade. The London insurance market, with Lloyd's at its core, has been covering marine risks for over 300 years. Insurance has remained central to the London maritime cluster, and London remains central to global marine insurance. London is home to 50 leading insurance companies and numerous broking houses, and sits within one of the world's great maritime centres. It is renowned for innovation, the quality of security, and the speed with which it can respond when casualties occur. It is versatile, inventive, and has expertise in covering a vast array of both complex and less complex insurance and reinsurance risks, unrivaled in any other maritime hub. It is no surprise, therefore, that what we know as the London market includes so many first-class international insurers. It has always been a marketplace of personal contact, handshakes, and looking one another in the eye. Time spent in the market is rarely wasted if one's eyes and ears are open to what is happening. I would suggest that most marine insurance practitioners would not have had it any other way, but suddenly it was forced upon us all. A sector which had never worked from home found itself doing just that. So how did this ancient marketplace, steeped in tradition and formality, fare with this enforced change? From where I sit, as a risk manager and buyer of insurance for a large shipping company, I would say that it fared remarkably well. The changes experienced by London were no different from those endured by other insurance markets, but they were more acutely felt because London went from face-to-face trading to remote trading overnight. It was a swift transition which showed the London insurance market to be adaptable and agile. Lockdown also coincided with a continued firming of the market. It enabled underwriters to operate and respond to brokers at their own pace and offer the terms they needed to fulfill their income obligations, having divested themselves of the less profitable elements of their portfolios a short while before the pandemic struck. Now we are hopefully through the worst and returning to our offices. Business travel is picking up, personal connections are being re-established, fresh capacity has come to London, and insurance rates are showing signs of levelling off. As we look to the future, the challenges which the global marine insurance market faces are numerous and varied. Some exist because they are issues the shipping industry is wrestling with, such as ESG, decarbonisation, and sanctions. Seafarers' safety and well-being, be it as a result of the inherent dangers of their profession, piracy, abandonment, the crew change crisis, or general public apathy, is not uniquely a shipping insurance or indeed a London market problem. It is everybody's problem. And I mention it simply because I have the opportunity to do so and because it is right to keep the subject in our minds. Other challenges are peculiar to insurance and the London market specifically, which is what I would like to focus on for the next few minutes. Knowing what makes a marketplace unique and preserving its virtues is itself a challenge. Much has changed quickly in recent years as players from outside the traditional maritime sphere gain influence as the market evolves and seeks greater efficiency. Identifying which traditions and practices stand up to modern scrutiny and which changes to embrace are conundrums. But the market must get it right, because there is too much at stake to pursue new measures which will only produce short-term commercial gain for very few. The use of algorithms can at times slow down the underwriting process as risks are put through actuarial models to see if they fit a preordained profile, rather than allow an underwriter to decide whether to commit capacity based on the merits of the information presented by the broker. Data analytics and artificial intelligence companies persuade brokers and underwriters that their view of the future of the insurance market is a certainty, rather than a recently formed personal opinion. The increasing influence of data providers has recently run parallel with the global pandemic, which prevented business travel. The purchase of data may have been a convenient substitute to face-to-face discussions, from which owners, underwriters, and brokers have hitherto learned about each other and where trust has been gained. But I do not believe it's in the market's interest for one to replace the other. The placing and amendment of risks electronically has increased and now plays a significant part in the arrangement of insurances. Each of these relatively new influences, data analytics, artificial intelligence, and electronic risk placing, has their part to play in the future of marine insurance. Each one offers usefulness and efficiency as a support mechanism to traditional methods. However, what we have identified as unique to the London market and worth preserving must be preserved. The ability for underwriters to remain agile and free-thinking is essential for the preservation of London's reputation. Although the market has lost a lot of experienced practitioners in the last 2 years, with the retirement of some highly regarded brokers and underwriters, there remains a wealth of talent, which must not be stifled by overregulation, excessive compliance, and laborious reporting procedures. Options for insurance buyers in a consolidated market have greatly reduced, and unless this is addressed by metaphorical acorns falling from metaphorical oak trees, will mean that the overseas markets might be where creativity and leadership are found, and London where additional capacity is sought. In my view, it is crucial to create an environment which facilitates market rejuvenation by encouraging the creation of new entities. Traditionally, the marine sector was an area where new broking houses were spawned. There was a time when established brokers, having learnt their trade and built relationships with clients, might have become frustrated by a lack of equity or just wanted greater control of their destiny, and gathered some colleagues and a few clients together and set up a new entity. Over the past 25 years, most of these privately owned independent boutiques have been swallowed up by mega corporations, where the freedom to demonstrate flair and individuality has become challenging. The independent niche brokers were once the access routes to sophisticated markets like London for the newly established smaller ship owners. To lose these platforms puts those owners at a disadvantage and commoditizes the larger ones. Most shipping clients still require the personal relationship, the expertise and dynamic service that were always characteristics of the London market. Insurance premiums rise and fall, but trust, quality of service, and personal attention should never fluctuate and must remain the market's mantra. Of all the challenges I have mentioned, decarbonisation is the topic which will feature at all LISW events, at COP26 in November, and at every shipping-related forum between now and 2050, when shipping can hopefully look back and say that the goals the industry was set have been achieved. But until then, laws must be refined, insurance clauses written, which will take into account developing fuels, new propulsion systems, and increasing levels of ship autonomy. Ship owners have huge responsibility thrust upon them. It is they who are being tasked with finding and funding solutions to decarbonisation and greater automation of shipping to an extent which doesn't happen in any other transport sector. This is something which, in my experience, the insurance industry understands, and I welcome their support of shipping companies during these transitional times and look forward to even greater cooperation. Sanctions and the pressure applied by international governments, which, in the process of trying to enforce laws and prevent illegal trading, can stifle legitimate and lawful practice by forcing underwriters to take positions detrimental to owners who may be well-known and trusted long-term clients. Pushing back against OFAC is a mammoth task, but the International Group Sanctions Committee, the Lloyd's Market Association, have successfully engaged with the EU, the UN, the US State Department, and the UK government to explain literally how shipping works, and that there are times when a vessel's automatic identification system must be switched off for safety reasons, and that in most cases, a lack of signal does not indicate sanctions busting or any other criminal activity. One final thing I would like to say is about a recent situation which you will probably have heard. Earlier this year, Lloyd's of London undertook a review of the salvage arbitration branch, which provides a support framework for the Lloyd's standard form of salvage agreement, otherwise known as Lloyd's Open Form. Although LOF is rarely used in these days of quick and easy communication between master and owner, its existence is of immense importance in respect of seafarer safety and environmental protection. The possibility that it might be closed down was met with surprise and concern by all market sectors. The chairman of the Lloyd Salvage Group wrote to Lloyd's expressing concern, as did the International Group of P&I Clubs, the International Union of Marine Insurers, the International Chamber of Shipping, the International Salvage Union, Intertanko, the Association of Average Adjusters, the London and International Brokers Association, and ITOF, as did several other individuals and maritime organizations. Lloyd's considered the concerns of the market and held internal consultations. The conclusion was that the salvage arbitration branch should remain as a platform for Lloyd's open forum, and that this historic and fair system of remuneration should be supported and promoted in the future. I share this story with you not because all but one of the organizations I mentioned is headquartered here in London, but because it demonstrates that the marine insurance industry, when working together for a common goal, can achieve so much. It also shows the London insurance market's willingness to review practices, adapt, and consult collaboratively, whilst maintaining traditional processes which serve the market and its clients. If there is one challenge to take away from those I have identified as peculiar to the London insurance market, the one I would lay down as an actual challenge is rejuvenation. If the market is to survive and thrive into the future, we can't have continuous consolidation without rejuvenation. And on that note, I thank you for your attention and wish all participating in LISW 2021 an enjoyable and successful week. Thank you very much.
Thank you so much for that, Andreas. I think we'll certainly talk about the LSAB more during the sessions ahead, but I think you're right. I think it was a great example of how the market can come together and solve an issue, particularly when it was all virtual, and the number of Zoom calls, etc., that took place to try and resolve that issue. The way we came together, the united voice, was a great tick in the box for the London market. And I think my big takeaway from your presentation, and you covered an awful lot, Andreas, so thank you for that. You definitely have laid the foundations for what will be a really interesting day ahead, is that whilst particularly over COVID, the use of technology has been accelerated within the market, we can't lose what makes London unique as well. And I think that balance is going to be absolutely crucial. As you say, we look to rejuvenate the market moving forward. Now, before I introduce our first panel, I just want to say a couple of things about to our virtual attendees. On the Hop-In platform, if you get lost at all, then there will always be a red tab which will tell you where to go. So we're just about to start the next session. Click on the icon with the red tab and you'll be where you need to be. And on that note, I'd like to introduce our first panel, chaired by Louise Neville, to come up to the front. Thanks very much.
Right, morning everybody. Thank you, Andreas. Food for thought across a wide range of topics that are impacting our industry at the moment. Good morning to everybody online. Thank you for joining the first session of the Shipping Risk Forum. Well done for everybody who made it here this morning. The rain and the construction works conspired against us, but well done for making it. Little did I realise when I joined Marsh in January 2020, the insurance broker and risk advisor, that weeks into my new role, I would have to find, and we would have to find, new ways of looking after our clients remotely, whether it be finding solutions for prospective clients, placing an insurance policy, or collecting a claim from insurers. Prior to my time at Marsh, I was 25 years an underwriter. And I have to say those first few weeks working remotely were probably some of the most difficult and challenging, but also exciting times in my career. You've heard from our keynote speakers, and Andreas made a good point. Insurance really does cover so much and is an integral part of shipping and trade. And what we'll try and do in the first session is focus on just one particular area, which is marine insurance, a dynamic marketplace. Now, those of you that have been in the industry as long as I have, or perhaps even longer, that dynamic is not always a phrase that we would associate with our industry over the last few hundred years. But I think over the last 18 months or so, we have seen big changes in the way that we do business as owners, brokers, and as a market. And you've already heard one view, and the view was that the market fared remarkably well with this enforced change. So in this session, I'd like to explore how we've adapted to provide insurance to shipping, investigate if the trust element between insurers and the insured has changed, find out how casualties have been assessed with travel restrictions, and we'll also discuss if the pandemic has accelerated the way we use technology and what that may mean for all of us long term. So I'm going to attempt to monitor questions coming in from our remote audience via the Q&A function on Hopin as we go along, and we'll be looking to take questions from our in-person audience at the end of the session. So at this point, I will hand over to our distinguished panel of speakers. I would like to ask the panel members to introduce themselves and offer a couple of initial thoughts, starting with Andreas, if I may.
Right, well, good morning again. My name is Andreas BISBAS. I work for Tsakos Shipping. I've been with Tsakos for 16 years. I'm responsible for the insurance of the fleet and for making sure our captive insurance company returns a profit. Prior to that, I was a broker at Lloyd's for 23 years. Yeah, that's about it.
Thank you. Paul Fry, head of hull for School in London. I've been with School for 5 years now. Started my career in 1994 and have worked for a couple of insurance companies and Lloyd syndicates. I'm also currently co-chair of the Joint Hull Committee and sit on the IUE Ocean Hull Committee also. Over to you.
Thanks, Paul. Don't shoot the lawyer. Mark Lloyd, partner at Kennedy's, also director of Maritime London and chairman of the Admiralty Solicitors Group. Been doing this, I've got no hair left, otherwise it would be grey, for about 30 years. Marine insurance specialised all the way through. I think between all of us up here, we've got a lot of years of experience, and hopefully we won't come up with too many funny stories, but I'll hand it over now. So.
Yeah, thank you, and good morning. Simon Swallow. I'm the CEO at Shipowners Club. I've just celebrated 30 years, never thought I'd stay as long as 30 years. And there's a few of the audience who know me. I started my career in marine insurance back in 1982. So next year, 40 years in this business, which I think plays a key element to some of the discussions we'll be having this morning about the benefits that I have and others have in the fact that we've been in this business for a long time. And the people that we need to be concerned about, I think, are our young colleagues who are new to this industry, where we need to encourage them in their careers. And you asked for a couple of thoughts. One is collaboration. I think collaboration over the last few months, 18 months, has been terrific. And also engagement has been enhanced, I believe, and also efficiencies. So there's three words there: collaboration, engagement, and efficiencies. Thank you.
Good morning. My name is Andrew Yeoman. I'm the Chief Executive of Consiris. We are a technology company. One of the things that we do is provide data and analytics for the marine insurance market, with about 25 customers here in London and internationally. I first started with Marsh back in 1991, where I stayed for 6 months, and then left the insurance industry until about 6 years ago, when Consiris as a company entered the marine insurance market.
Thank you, Andrew. Thank you, everybody. So turning to our first topic, how has cover been affected by the pandemic? And if so, what lessons need to be learned for the future? I think you'll all agree there are many ways that we can interpret this question, but turning to Paul first for his insight as an insurer.
Yes. Decided not to focus on clause construction
That's
at this
good.
point. So
Thank you, Paul.
I think if you look at what happened, obviously it was a very quick change of trading patterns. You had container vessels that were actually laid up for a relatively short period of time in hindsight, but quickly got back to it. So I think that the easiest focus would be on cruise and ferry, a very rapid deactivation of vessels that were sent to port. Actually, some of them went to their home port, others were found at anchorages in ports that they'd never been to before. So as underwriters, of course, we've got a concern. We've got, obviously, the immediate concern was for crew welfare, some that were stuck on vessels for too long. So the first thing is the welfare, but the secondary of that would be the concern of maintenance and parts availability and surveyors and just logistical help to the crew to perform their duties at a time where they're probably quite stressed and getting tired themselves. So then you had the vessels aggregating in areas that we hadn't seen before. So again, as underwriters, we had to be very concerned to make sure that we weren't going to be hit by a storm event that would hit a number of vessels, and to work with our reinsurers to give them the information that we were asking to know where these vessels are. And of course, this was all at the same time where, we were worried, and as owners were, about solvency, but of course, insurance was being hit repeatedly with claims. So I think there were probably brokers and underwriters out there also thinking about their solvency. So you've got ship owners saying, can I have a break on my premiums at a time where the risk was slightly unknown? Underwriters, we were giving some premium back, so the pool of cash has gone down to pay for claims that were turning up. We were seeing ranging damages and lost anchors at sites that were just unforeseen because the vessels hadn't been there before. So I think all of this was a perfect storm that could have been a disaster, could have been really fractious. But actually, I think underwriters working with brokers to get direct access to owners, communication has just stepped up like you couldn't have imagined. And I think everyone's sympathetic and empathetic to each other's needs. We asked loads of questions, and I believe every broker took those questions seriously, realizing that we had pressures of our capital providers, our reinsurers, and we all wanted the same thing, which was the safe return to service, which I'm pleased to say we're getting there now.
Thank you, Paul. And you talked about some sectors of the shipping industry that were particularly impacted. I guess the most high profile of those would have been the cruise industry. Andrew, did you pick up anything in your data that demonstrated the different patterns or the impact of the cruise industry during the lockdown and during COVID?
Yeah, absolutely. So we were able to, I'll take a step back. So we track all of the global shipping industry in real time. And we were able to identify distinct trading pattern changes, both in the cruise industry and in the cargo industry. And obviously that created probably one of the most immediate impacts beyond that of cruise safety was accumulations of risk. Certainly if you enter the Caribbean, at times there was a massive accumulation of hull risk. So having that data visibility we found was very helpful to a lot of our customers.
Thank you. And Mark, from a legal perspective, and obviously part of the question talks about cover. Did you see particular coverage issues during that time?
We saw quite a few, actually. I can't talk about a number of the BI claims. I think we've all read enough about what happened in the UK and the US courts around BI. But that seemed to come as a massive shock to quite a few underwriters and insurers as to whether that was even a cover that had ever been sought in the market. So that was a starting point. You then deal with the immediate impacts of the pandemic and impacts on trade, flow of commodities, movements between markets of both container and bulk cargoes, and the ability then of brokers and underwriters to renew or place insurances. So as Paul very nicely said, we're not going to go into the detail of the clauses. That would bore you all rigid, and I think a lot of these clauses are still being adapted. What the pandemic has shown is that the ability to place business and develop business has worked very well. The underwriters are slowly coming back to physically being in the office because tech has worked so well on how they place insurance. The terms of cover, I think it has led to as Louise very nicely put, a nice dynamic stage of the market following on from the Lloyd's Decile 10 review pre-pandemic to the global economic issues created by the pandemic to now what happens with capacity and innovation in insurance products. If you bear in mind that we've had some very major casualties, which we'll come on to later during this period, including the Ever Given, that leads, at least from a cargo perspective, to consideration of is cargo cover as it currently stands fit for purpose? Delay claims, how does that fit in your standard cargo cover? So I think the pandemic and the lockdown and everything around it has led to a really nice wait to work out where some of these traditional marine insurance covers go and how people want to work it, which would lead to the buyers of insurance establishing what they want their programs to offer. So yeah, I think it's been a useful change on actual coverage as well.
Thank you very much, Mark. Moving on to the second question that we're going to pose in this session, in terms of the trust element that Andreas has already referred to, how has the virtual environment affected the crucial element of trust between insurers and the insured? And Andreas, maybe I could turn to you. You've already touched on it in your keynote speech, but if you could give us a bit more of your own personal view of that side of our industry.
Indeed, a personal view is all I can give you, because I can't speak for other companies and other relationships. From our point of view, trust has not been affected at all. Trust is a very solid thing once it's established, and it has to stand up to and be able to absorb changes that may come along. And so what has happened in the past year has been something that I think all have expected to be a temporary thing. And so therefore, it's a hurdle that we have to get through. The people that we deal with, the people who insure our ships have been our underwriters, some for more than 25 years. And so the relationship is long and strong. And so it's not something that just a year's worth of not seeing each other or 18 months of not seeing each other personally is going to have an impact on. Our brokers have done a good job. We've spoken to our underwriters. We've gone through a renewal where we've had meetings, online with our brokers, with our underwriters. So I hope it's not the way it's going to stay in the future, but so far trust is absolutely solid. I can't say that we could build trust with new people who are not involved in our business yet and who may become involved in our insurances. I'm not sure how that would be established without us meeting and talking to each other. But so far, the relationship that has existed continues unchanged.
Thank you, Andreas. And Simon, maybe we could turn to you and get your opinion. I mean, Andreas has referred to underwriters a lot in what he just said. What's your view?
I keep coming back to some of Andreas's opening comments in his statement, which I wrote down, because I think actually it almost replaces what I was going to say when he makes reference to we must remain agile and we must have free-thinking underwriters and we must not stifle talent. Fantastic words. And we must trust quality of service must never fluctuate. And I actually think during this period, that trust has been there. And I think if anything, it's actually been in some areas enhanced through the medium of Zoom and all this other things that we've had to use. But I come back to the fact that I've been in this industry a long time, rightly or wrongly. And it's been great that I'm able to talk to our members around the world and the brokers with whom we work, because they know me and the trust I believe is there. So I don't really see that as having had a major impact on our relationships with our members. It's been more of a challenge for our younger members of the team as we start introducing new people and we start to develop them in their careers and the coaching and the mentoring that we give to them, and as they develop and build the trust. But because we've all been able to use these mediums of communication now by bringing more into our meetings, instead of me getting on an aeroplane and it's just me that meets the members, I'm able to bring others into the meetings, which has again helped to improve that element of trust. But I also think it's not just with the insureds, it's also with the regulators and the rating agencies. And they, rightly or wrongly, we have to spend a lot of our time meeting with them as well. And I think that's one area that I think has suffered a little bit, trying to do that remotely, not being able to get in and see them more frequently. But fundamentally, yeah, we want to get back to face-to-face as much as we possibly can. That is absolutely key and essential part of the job.
Thank you, Simon. And I agree. I think possibly it's different for different age groups. It may be harder for younger people in our industry who don't necessarily have those relationships with clients or brokers or the regulator to carry on doing business in the way that the rest of us are able to. And it's really important that we build those relationships for the younger people in our industry. No questions I think have come through yet, but do remember if you're online to use the Q&A function if there's anything you'd like to put to the panel. And in the meantime, I'll move on to the next question that we wanted to talk about, which was with regards to casualty assessment and how really that's functioned in the world that we've been living in with quarantines and travel restrictions. And I thought I'd turn to Mark first of all. Mark, have you had some actual examples during that period of time? And if so, how has everybody gone about that?
Thanks, Louise. Yeah, as I alluded to earlier on, there's been some major casualties during pandemic. And whilst pre-pandemic, there had been more growth towards using technology to investigate a casualty, even if it's in deepest, darkest waters off Sri Lanka or Indonesia. But the difficulty is with the complexity of claims not getting any less. I think anyone who's been involved in any of the casualties recently will realise that complexities are getting more with regulation, with situations, with global trade. So if you have large casualties or complex casualties, such as the Crimson Polaris, the New Diamond, the Wakashio, the Ever Given, then how do you actually investigate those and protect every party's interests? And traditionally, of course, you would have surveyors travel from centres such as London or Singapore. Quarantines have prevented that. I think there have been workarounds in virtually all casualties. Surveyors have got on site, but the problem is how many and for what experience. And I'm aware of one situation where surveyors could not get to the casualty in time, and they had to employ more local surveyors, and that was the Wakashio, which was a very complex issue. Now, down the line, does this lead to some problems? Does it mean that if we are relying upon subcontracted expertise to deal with casualties of that complexity, will that expertise understand what is needed for giving evidence in an English High Court or arbitration proceedings in 5 years' time? When the evidence has been gathered by somebody who is not familiar with what is required, where there may have been conflict and difficulties getting access and seeing what was needed. So I think there is a slight issue that's been created as a matter of practicality and logistics on casualty investigation. But with the positive of that, the parties have all worked together to try and ensure that those difficulties have been minimised. Now, I know we'll come on to how tech may have happened on that, but I think from a legal perspective, there may be some issues to come from this. But again, I mean, as a client, Andreas, you may have some views.
Andreas, during that period, have you had any sort of first-hand incidents where you've had a situation and not been able to act in the way that we've been acting over the years in terms of flying somebody down there and getting first-hand information?
Well, I'm pleased to say we haven't had too many incidents, but we've had a few, and I personally have seen no difference. However, I am not one of the chaps who has had to go down to our ships that have needed the attention of a superintendent, who, in the few instances that we've had, our superintendents have managed to get there, but they've ended up staying sometimes, a really long time, in a yard where a ship was under repair that, because of lockdown, ending up staying on board, the repairs being delayed, but actually getting people to the ship following casualty. Actually, there's been a good infrastructure in place and quite a lot of resilience. And so, in that respect, my colleagues have managed to get there, surveyors have managed to get there, and sort of the support network seems to have gone on pretty well, actually, despite the difficulties of the pandemic.
And getting them back hasn't been too much of an issue, or is that part of the fact that they've had to stay there quite a long time? Were things taking longer to oversee, or was that
Repairs,
getting them home?
in many cases, it was repairs taking a very
Okay.
long time because yards may have closed down and not allowed anybody in,
Yep.
and they were only using the equipment that they had and weren't bringing any steel or things like that. So things have taken longer, probably much to the distress of loss of hire underwriters, but in practice things have gone reasonably well.
Thank you.
Louise, I know Andrew's going to jump into the tech. I've got a follow-up just from Andreas's comments that I've got to mention. The other issue, which Andreas has alluded to, is this is going to lead to more costly claims. Some of the GAs out there, when surveyors have been stuck in yards or stuck on site for weeks longer than they were expecting, are going to lead to claims on insurers for the costs involved as a result of that, and the increased cost of travel and the regulation on dealing with pandemics. So I'm aware of a number of claims in GA where simply the cost of having surveyors on site for, say, 3-4 weeks instead of a week, plus then the 10-day quarantine time when they can't work on another casualty, means that what you may be building into that head of cost for claim is vastly higher. But sorry, Andreas.
So underwriters, it sounds like you have been warned. Just Simon and Paul, just quickly on that point, have you seen any evidence of that increased cost coming through yet, or is it too early to see that trend?
I'd say it's not as bad as we feared. It's definitely there, as you say, on loss of hire. It's definitely there, and just general availability, a few more days in the yard, or limping through with temporary repair for a little bit longer. But no, not seismic as we feared. That's my experience.
Well, actually, I would suggest that we have. The indirect consequence of the pandemic has been quite significant. We have probably more wreck removals than any other P&I club put together because of the types of ships that we insure. And getting salvos to the sites has been a real issue. And we've therefore had to place chartered tugs on standby, monitoring the wreck. And while we're waiting for a salvage team to come in because of mobilisation problems, getting salvage teams onto site as a result of delays due to quarantine, etc. Oh yes, we've certainly seen claims inflation as a result of the pandemic, without question.
Okay, so we've got differing views and differing experiences amongst this panel. And I finally turn this point to Andrew. We've heard obviously how we've been dealing with casualties during this time, but how do you think technology could play a part in the future?
Well, I think there's two elements. There's a lot of the opening comments. We've talked about how we've all adapted to the use of technology such as Zoom, but that has its limitations. Just in every day, I've got a situation where my challenge was everybody looks about the same height on Zoom. And when I've met them in reality, I've got two ladies, particularly one's 6 foot tall and one's 5 foot tall. I'm like, well, I didn't spot that one coming. But when it comes to casualties, what it does mean is that there's an element of your experience and instinct that you miss from the technology because you don't get the ability to walk around and absorb that information. So I think that's the challenge. The quid pro quo is that you obviously get the immediacy of if someone does a walk around with a camera, you can have the ability to get more immediate sort of assessment. So I think that's going to be a balance. The technology is going to improve going forwards. I think one of the areas that struck me the most was actually around the Ever Given, in that what we had with the Ever Given was an independent witness, which was the data, where we were able to say, well, this is what the data is saying. This is the speed that the data is suggesting that the vessel was transiting before. And in fact, when you look, it has a history of transiting at various speeds. I'm going to stay away from the actual speeds for all sorts of legal reasons. But that I think becomes an interesting aspect. So I think that the data will become another sort of quote unquote expert witness in as you start to get into the settlement of these. So what is it showing? And ultimately that can arguably lead to quicker claims, because if you can see that the data is showing one party clearly at fault, then actually you might have an opportunity to settle that quicker at a lower cost and avoiding lots of administration down the line. It's only going to get more though.
I think particularly with the Ever Given, there was so much misinformation. And the other thing I found, that everyone in my family was asking me all these questions. They were suddenly interested in what I did. But yes, the amount of misinformation was crazy. And yes, having the hard data in that instance, I think was.
Well, I switched on the TV to find that one of my team was on news at 10. I was like, oh, that's interesting. How's that happened?
And Louis, particularly for the whole market, collisions have for a number of years now been dominated by tech.
Yeah.
Because the AIS track of each ship is already publicly out there before insurers are even probably notified about the claim.
True.
So in the whole market, tech has made a difference. And it's making sure that the courts, the arbitrators and everyone else is aware and can cater for that. So for example, the English High Court has recently updated the CPR to make sure it can deal with electronic evidence, AIS tracks, and make sure you don't end up with an expensive trial when both of you are looking at the same AIS data.
Mm-hmm.
So tech has been coming and making an impact on casualties anyway.
Thank you, Mark. And sticking to the subject of tech and data, the final part of what we wanted to discuss this morning in this session was to do with how the use of online platforms and big data accelerated by the pandemic. So was the use of it speeded up by what's happened in the last 18 months? And if so, what do we think the long-term implications of this shift may be for the market? And I turn this first to Paul and Simon. Did you feel accelerated change in your companies during this time that wouldn't have happened had we just been, at our desks or on a plane as we have been usually?
Yeah, I mean, I'll go first. I mean, we were ready to go, but we didn't know it, is the way I would sum it up. So, we were very quickly turned home. I think before the pandemic, we were using electronic trading as a conversion tool. So we would have we would enjoy brokers coming in, you thrash it out. When the deal was agreed, it popped up electronically, you agreed it. Admin efficiency was definitely there. I think we've used it for a little bit more than that. And I think more people have adopted it. So there were some that hadn't quite signed up to it, bought into it. I think they very quickly realized they had to. I still think from the broker's point of view, you guys, I sense, do not want to trade electronically. You want the chance to speak on behalf of the owner. And that's right. So I do actually think that it's there to do more, but no one wants it to do more at the moment. So, there are so many data points we go to assess a risk now, and it'll be used in various trading platforms. It'll be used in ship movement technology, and we need to bring these all together, which does take a bit of time. But so I sense the broker still wants to talk to us, acknowledging that we probably won't say yes or no, maybe straight away. So we need to go away and turn it around. I do, however, agree we need the ability to do that when we know what we're doing. But we've got to find a way to bring all of these various information tools into one streamlined service. As an underwriter, we're not having to do 7 logins to get 7 bits of information. So the challenge is on insurers to embrace and to bring this stuff together, which will be some investment, I'd imagine, for all of us.
Yeah. From our point of view, I don't think the pandemic accelerated change and embracing big data, much as we see it and recognize it has a place in the market. We just had more time because we weren't on planes and traveling. We suddenly were available 24/7 and we couldn't escape. So we had to think about it. And we started to look at our operating practices, and we've realized that our industry of P&I, I'm ashamed to say, in some areas has some pretty antiquated practices, the way we go about our business, tremendous as it is. And we need to look at the way we do business. We need to look at digital platforms. We need to look at great use of digitalization, which we are. So what this pandemic has allowed us to do is given us this time, which I made reference to at the very beginning, to be able to look at it and replace some of our antiquated practices that we have, but never ever taking away, as we talked about earlier on, the flair, the innovation, the talent. We must never stifle the talent of our people. But we certainly see that data going forward will have a big impact in our market, and it will greatly enhance what our underwriters are able to offer. We want the two to work hand in hand together going forward. One must not replace the other. So I think that's key. So it's on the cards for the future, I'm sure, but I don't think it's really had a big impact to us over the last 18 months.
Okay, so slightly differing views again there between our insurers. Andrew, did you feel this change accelerating in other companies, our industry, in other areas of our industry at this time? And do you think risks being assessed algorithmically and statistically is a case of when and not if?
Yes. Well, the nice thing about being on panels with people, and I was listening to Andreas's open comments, is it's clear we may have different opinions on certain areas. Yeah. But actually, that's what makes for a good panel. I have a question to the audience. Did anybody use Google Maps to find this location? That's pretty much. So now the thing is, we don't just follow Google Maps. We use Google Maps as one input because we look at the Google Maps and go, well, that doesn't seem to make sense when I actually look around as well. And that's my view on technology and underwriting, is to the point that's been made, is we want underwriters to be able to use their judgment. But just like Google Maps will say to you, if you turn left, it's 5 minutes quicker. If you turn right, it's 1 mile shorter. But it's up to you to make the decision as to which way to turn. And you know, history is littered with photographs of people that have driven into rivers and stuck under bridges. And when you ask them, well, why did you do it? It's like, well, because the system told me to go that way. So if we cut to underwriting and think of the conversation between the regulator, if the regulator says, why did you write that risk at that price? If the answer is because the algorithm told me to do it, then you have a host of problems to deal with in your organization. So I am an absolute ardent believer in that the algorithms and data it's a non-optional outcome, just as we've seen it pervade every other part of our life. But actually, the way that it does it is by making the experts more productive. So one of the areas that we saw in the pandemic was submissions. You know, from a broker perspective, it takes no more effort to email a submission to 20 people than it does to email it to 5 people. And that created a challenge in that I've got more submissions that I need to look at. So if technology can help you root through those and those, that's an absolute benefit. But if it's making the decision for you, I think that presents a bit of a cultural challenge. Having said that, and we talked about it, you know, so as a technology vendor, the question I ask myself is, what would happen if everybody adopted our technology overnight? What would happen to the industry? Well, arguably, the same amount of premium would exist, the same amount of claims would exist. So all we've done is put up the cost base of the industry. So that clearly can't be the answer. For me, the answer has to be to use the technology to influence behavior. So if you can see claims that are about to happen, if you can see that a cargo is getting warm or a ship's going to an area where there might be an issue, if you can intercept that before it happens, that eliminates a claim, and that's a good outcome. If you can use it for arbitrating the claims, again, that's a better outcome. And ideally, then you'll be able to use that in both underwriting and in product innovation. And I think those are the areas that I think are the most exciting, is new products which operate on the back of data that might be parametric in nature or more flexible. I think those are really good. I think the only statement which I perhaps disagreed is using the underwriter's sole opinion. There's somebody who once said to me that they asked their underwriter how they made a decision, and they said they make it based on gut feeling. And it's like, well, I have many things that I have feelings in my gut about, but whether I should write a risk or not is perhaps not one of them I should be following as a methodology for how I choose risk. So again, I think it's a balance between technology and people power.
And I think that's what I was trying to get across and say. I do think one will help and support the other. I think it's fundamental. And actually ourselves, and I'm not just saying this to be nice to our friends from the school, we actually are aligned. And I think though that it's the point of addressing the question, have we seen the pandemic that it's accelerated change? No, it hasn't from our perspective, but it's given us the time to look at that change. That's essential. But what I would add is that data is absolutely key, and we are only touching the surface of data. And I think that is something, if I can, to plug the work of the international group, collectively, we have a huge amount of data, and we must extract some of that data to the benefit of our global ship-owning members and communities, and we can all learn from to ultimately improve the welfare of seafarers and safety at sea, etc. And that's something that I think we're going to be pushing further on. So data is essential. And
I think, again, my master is we can choose to like this or not like it. As individuals, you can choose to adopt it or not adopt it. But one of the decisions that's not in your gift is whether it's going to happen or not. It's not in our gift. So the world is going to have more data, and you can't get through it manually. So we're just going to have to adopt technology.
Please don't forget the lawyers, though.
We
Of
try our
course,
best.
never forget
Because
the
the law is not catching up with the tech.
Mm.
So however the data is used going forward, we must make sure that regulation can keep up. And for example, the Insurance Act 2015 simply refers to how data can and should be used in a legal context and in a relationship between an underwriter, a broker and an insured, what is disclosable, including historically. If an assured has worked with an underwriter 10 years ago, then move their account somewhere else for 9 years, then they renew and they have a dispute in that new year, data from that 10 years ago under the Insurance Act 2015 could be relevant. So don't forget, the law needs to catch up with where we're going with all of this. Law is not necessarily as quick as the insurance industry on some of this. So.
Thank you, Mark, and that's a good point. I'd be interested to hear from you, Andreas. I know you've touched on this already briefly, but Simon obviously talked about data being advantageous potentially to the ship owner if used in the right way. Andrew obviously has got a more extreme view, as you would expect. What is your view on this rather wide-ranging topic?
So, well, yes. So from an insurance point of view, just a few things to address here. So don't forget the lawyers, indeed, but also don't forget the client. And as a client, as somebody who I work for a ship owner who has given me the job of insuring our fleet, if he thought that I was using a broker who just pinged 20 submissions to 20 different underwriters, he would say, why do I need you? Or he would say, why do we need the broker? The placing of the risk, the physical placing of the risk just by using tech, I don't think is the right way forward if it's going to replace the relationship. I can see and appreciate and get the value of almost every other aspect of everything you said in terms of whether it's claims, whether it's gathering intelligence, whether it's knowledge, and how we use that. I agree with absolutely everything. But replacing the physical relationship with people, that we have with people by just placing risks digitally, I just don't think it's the right way forward. I think that people I think that ship owners will resist that, and they will find alternatives where they know that somebody is creating a bespoke insurance policy for them. I think that the multiple submissions to just get a risk placed, I think, is not the way forward.
Lloyd, we said we're going to ask you one back. You're a moderator, but you're the only broker on the panel.
Yes, I was going to
What
say
what do you think?
Yes.
It's big data at the end of your job.
I mean, my only comment on this, I probably can't comment too much because all will probably tell me off. I think as a broker, it's really important for us to remember that all our clients are different. One size does not fit everybody. Some clients get so excited about data, almost forcing us faster than we're ready to be. And then others want their hand held by the same individual, whether it's claims, whether it's placing the risk, whether it's just generic questions about the running of their day-to-day business. So for us, we can't try and make each client, push them the same pathway. They are all different, and we must remember to treat them differently. I think one thing that we can take away from all of this is that the next couple of years are going to be fascinating as we take the best of the past with what we have now, making sure that we do not get left behind by not investing in the future. And both personal relationships and data will play their part. But you've heard enough from us, I think. I'd like to turn it over to our live audience. Do we have any questions? Joss, can I leave you to be?
I'll go to you first, Simon.
Thank you, panel, and thank you, Louise. Probably not on obviously a fascinating discussion, and perhaps I'll start with an observation that will lead into a question if I get that far, and forgive me if I don't. One of the things I've experienced, as we all have over the last 18 months, and is the use of technology, the use of Teams, Zoom meetings with clients as well. But one of the things that mortifies me as we put our clients and the people that we're working for as brokers together with their markets is to sit through a Teams presentation for an hour where the client is faced with 20 of his underwriters, and at the end of the session, not a question gets asked because everybody sits in their remote location and is a little embarrassed to do so, or is probably a little bit distracted as that meeting goes ahead as well. And so I think what that demonstrates is actually to Andreas's opening comments about relationship between all those stakeholders within that relationship as well, is that I know if those same 20 people were in the room with that client, that the questions would be asked, and actually what we would do, we would have a series of meetings as well. And I think because of that breakdown in the relationship, and I expected to disagree with Andrew about the use of data, and I found myself actually agreeing with some of his comments. The data for data's sake is not what we're looking at, but actually having the data there and using it is one thing. However, that has to be married with the relationship, the understanding, the ability to use the data for the purposes is intended, rather than ultimately the data is the only point that makes the decision. And if we allow for this continuation of a breakdown of relationship between the stakeholders, then unfortunately data is just going to take over, and unfortunately the marketplace, and particularly this marketplace and the one that we are here to represent today, actually loses its flair. And quite frankly, it doesn't matter. There's an algorithm that can sit in Mumbai that can do it, and probably and probably cheaper in the short run. And we've ended up destroying what we've worked so very hard for generations to make strong. So again, I'm not sure there was a question at the end of it, but I would happily sort of see what how the panel sort of feel about that.
I agree with you. I agree with you. I think that you say about the market we're here talking about. The London market is unique in that it has the face-to-face relationships that other markets don't have. It has a collegiate sort of style. Within 250 meters of Lloyd's, that there are most of the brokers, most of the underwriters, and lots of the other service providers. So just that, walking up and down the street, going into Lloyd's, talking to people, seeing someone in a pub or a coffee shop, all of these things help the Lloyd's environment. And I think if people didn't leave their offices and just sat in front of a screen and operated on that basis, Lloyd's and the London market would lose their uniqueness.
Yeah, I mean, your opinion is mine. I agree completely. I think the last 18 months has been functional, not dynamic. And everyone has now definitely got weary of Zoom meetings, because every 1 hour Zoom meeting takes an hour, and someone has the cheek to say, "Oh, I can give you 7 minutes back," as if it's a gift from the gods. But it isn't. It's just shows you that we've stretched simple things into long meetings, and actually the bit that counts, the time with the client, is also squeezed into the same area. So when you get to the end of a meeting and you say, "Are there any questions?" you've probably got half the people that need to jump into the next meeting. Or actually just think, you know what, actually the minute this is over, I'm going to email you and get the answer to that, because there is a shyness. But again, is that shyness comes down to the experience and the education. A junior underwriter in awe of the broker and the client, is he going to ask the question that actually face to face he'd say, "Joe, I'm really interested in your opinion on this." They're not going to say that in their peers if they haven't got that confidence and experience.
I've just had a thought. It suddenly came to me. This is like a big paradigm shift. Lloyd's of London is going to change, and suddenly it will become a collaborative workspace, and all the boxes are going to go, and it's going to suddenly revert to the old coffee shop again, of people talking to one another and chatting, and it will just go there to meet people. Baltic Exchange will return, and we'll be having trading floors again. We've come complete circle. It's wonderful. Yeah. I'm looking forward to it, Louise. It's going to be good.
On Andreas' point, on your point about the data, I think there's two very distinct types of data that we deal with. One is retrospective data, so things that have happened, and one is prospective. So if I upset anyone with this statement, I apologise in advance slightly. Is that your ability to understand retrospective data? You've lost that battle with algorithms. It's like trying to play chess against a computer. That's done. That's passed. But prospective data is really interesting. So if you were to sit as a broker in front of a client and say, I've spoken to, so in front of an insurance, I've spoken to a client, they've got a change of trading pattern, they've put a new technical manager in place, these are the changes made. There's no way that the algorithms will understand that, ever. But if you're trying to sit there and try to justify where the ships have or haven't been, or how they haven't behaved, or whether they've been inspected or not, yeah, that game's over. And for me, one of the things that I think is the best part of what technology companies like us provide is that we've handled the retrospective stuff, because the quality of conversation is in the prospective area of what's going to happen going forwards, because the past is not an indicator of the future in these areas. That's not the sole indicator of the future. So for me, it's about being able to get the quality decisions there.
Thank you. Do we have time for any more questions?
Yeah, I think so. One more quick
Go
one.
for it.
I'll try to be quick. It is kind of complementary to Simon's question and what has been discussed. I'm a claims broker, and as you know, claims have gone into electronics much beforehand via ECF. And I had been lucky enough to start when it was just face-to-face broking, which was most of the time quite inefficient, but allowed me to learn on the job. I gained immense experience, and not only that, as a claims broker, I wouldn't be able to go into an underwriter's office without knowing my policy or without knowing my survey report or the casualty details. Whereas on the ECF, if we are to be transparent as it is, as a broker, you may just put the survey report and the policy details are already on the system. So it does take initiative from the individual or the company to train. I'm coming to my question. And also, when recently I did see an underwriter, just to keep in touch, when I say recently, obviously pre-COVID times, the underwriter asked me what the problem was. So there was no problem. It's just that the psychology was, if I'm walking into an underwriter's office with a claim, it may be problematic. So obviously, our keynote speaker has told us what the ship owner wants, but as underwriters, brokers, what are our duties? One, to train younger generation. Two, if we are to go into placing electronically, how do we overcome this notion that if as a broker you walk into an underwriter's office, it means that it's a problematic placement? Thank you.
We're all agreed that you have to train the younger generation in terms of claims handling. Claims handling, as we know, is the shop window for an insurance company and an insurance broker. And if we can't get that right, then we've got real issues. But what do we think the answer is in terms of training our young people to be as knowledgeable and experienced as someone like Melis?
I think there's a balance. I think we all identify that dealing with the pandemic and the issues it brings is to ensure that the generations behind us have the business to do in the right way. But let's not forget, some of the kids, and forgive the terminology, who are joining the business in their 20s are digital natives. They've grown up on tech. Whereas the people in their 30s and 40s, when you were trying to run businesses, there was always that debate about people hiding behind email to not get used to picking up the phone. And ECF has the problem, as do some of these tech-based systems, that you're a keyboard warrior. So you don't actually get the problem solved, you're simply typing in what you think it can. So that's a training and mentoring situation for all of us, and for the older people to understand the familiarity with tech that some of the youngsters have. So I don't think there's an easy answer, but realistically, it's got to be by mentoring and training and saying face-to-face has its place. You can solve a claim as a broker with an underwriter far better if it's a problematic one by sitting down opposite them and saying, look, these are what the problems are for the assured. We understand your problems. How can we get around them and solve them?
I think Melis is quite right, though, that if I get a call, although I don't really see day-to-day brokers anymore now in my role, but if certainly if I got a call that somebody wanted to come and see me, my immediate reaction would be, oh dear, Louise wants to come and see me. There's a problem, and you know,
All
and I
goes
think,
up already before I've even
Yeah.
sort of started talking.
which is a shame in a way. But I because we all really relish the opportunity to meet with brokers. It's great, and also though that when we do get those opportunities, we must bring our younger underwriters in, claims handlers into those meetings as well for their own training. I think that's essential. It really is. But I mean, you make such a great point. I have a 24-year-old son, and trying to get him to negotiate with anybody face to face is a problem. He negotiates doing this, and something we've got to try and overcome.
I think we're running a little bit behind schedule, so may I suggest if there are any other questions, and I know a couple have come through remotely now as well, that we try and deal with those in our slightly shorter networking break. I'd like to thank the panel for their insights, views and their comments, and I would like to thank you all for listening. Thank you very much.
Thank you, Louise. I think, as Louise mentioned, we will have a slightly shorter networking break. If we come back around 25-2-ish for the session on sanctions, just because we can't be too late due to our online audience, that would be fantastic. And I think there's a number of things you touched on there, which perhaps you can bring up in Simon's session at the end of the day. And one of the things that I was thinking about, actually, and maybe LISW this year is testament to this, has tech been too successful? It is so easy now to join conferences, etc., virtually. I think we all thought that there is going to be a big clamour to get people back into the market. Is it going to be a slower return than perhaps we had anticipated? And maybe that's something that we're going to have to work through as a market. But Simon, I'll leave that for you to discuss when you get to your moderating time. But anyway, thanks very much, and go and grab a quick coffee.